Welcome traders to this new market review for week 7 for Nasdaq futures. So let's dive into the economic calendar for last week. On Monday we did have President Trump speaking at 4:30 p.m. At Tuesday we had 10 a.m. high impact news, Fed Chair Powell testifying. At 3:30 p.m. President Trump was speaking again. At Wednesday at 8:30 a.m. we had the main economic news driver for the week, which was the CPI release. On 10 a.m. we did have Fed Chair Powell testifying again. At 10:30 a.m. we did have crude oil inventories. 3:48 p.m. we did have President Trump speaking. And 5:05 p.m. we did have FOMC member Waller speaking, medium impact news driver. On Thursday we had the second main economic news event for the week, which was the PPI release. At the same time we also had unemployment claims. In the afternoon we had President Trump speaking again. And on Friday at 8:30 a.m. we had the core retail sales and retail sales month on month. And in the afternoon we had President Trump speaking again. So if we dive into the chart, on the weekly chart we can see that we had a beautiful up close week, very large range candle, larger than previous week's candle. We did have beautiful expansion towards the upside, towards the all-time high at 22,450. So we managed to gain a lot of ground into the all-time high, but didn't manage to take it out yet. So on the daily chart, we closed last week at this, the down close candle over here. As mentioned before, during these weeks I was monitoring this candle's high, because we did have 1, 2, 3 relative equal highs carrying buy stops above them. So my main target for the week was 22,111.25, and we finally managed to take that high out, trading into this busy over here. Yeah, beautiful week if you ask me. So Monday we opened lower than Friday's close. Had a beautiful up close candle for Monday. On Tuesday we had an inside day because it was the day ahead of CPI. CPI, we took Tuesday's low, trading all the way up. Did we take Tuesday's high? No, we didn't take Tuesday's high. But on Thursday with PPI release, traded up into the relative equal highs, and Friday creating the high of the week, exactly like the last 2 weeks. On Monday creating the low of the week, Friday high of the week, Monday low of the week, Friday high of the week, Monday low of the week, and Friday high of the week. So we traded into the busy over here, and we just fell short of closing the entire busy. On Friday there was no TGIF set up, so for next Monday I'm monitoring if price wants to trade back into the TGIF levels. A little messy over here, but the TGIF levels are 22,063.5 and the 0.3 level is 21,983. So I'm monitoring if price wants to retrace into this range over here. And as you can see, Thursday's candle created a daily busy as well. So that's a beautiful confluence over here. Okay. On the hourly chart, you can see that Friday 10 a.m. Candle traded into the busy low, and at the end of the day trading into consequent encroachment of that busy Friday 6 a.m. candle trading into the busy low, traded above the consequent encroachment of the busy, above the intraday high, London high over here, retracing into the lower quadrant and expanded towards the upper quadrant and left this tiny portion of the busy open. So that can be a beautiful target for the week ahead. So on Monday, or rather on Sunday, we had this new week opening gap. Opened, and we just pretty much consolidated throughout the day because we didn't have any high or medium impact news drivers except for Donald Trump speaking. The main headliners were for Wednesday and Thursday. That's why larger ranges were on these days. So on Monday, the midnight opening range is annotated over here. As you can see, throughout London, not so many things really happened. We pretty much consolidated throughout the session. Over here, I have the opening range gap annotated after 9:30 a.m. We had a premium opening range gap of 176.25 handles. And you can see that throughout the AM session, continuation towards the upside occurred. So opened on this candle. At 9:35 we created the first presentation, annotated in blue over here. We reacted off the first presentation towards the upside, engineering sell side liquidity below these relative equal lows. Traded back into the relative equal lows during the 10 a.m. macro, responded and traded away. So no high or medium impact news drivers, still beautiful trade opportunity if you were on the right side this day. And throughout the PM session we had a minor run over here, and at the latter part of the day returning into the opening range gap high and the first presentation over here. Yeah, pretty decent price action for Monday. Okay, on Tuesday, the day ahead of CPI, we had an inside day. We didn't take Monday's high or Sunday's low, so rather engineering buy side liquidity above the high and sell side liquidity below the low. So again, midnight opening range annotated, displays below, trading back into the midnight opening range low, trading back into the first presentation of Monday. Some beautiful price action to the downside, reacting from the first presentation. 3 a.m. macro, trading up into the midpoint of the midnight opening range. And prior to 8:30 a.m. we had these relative equal lows over here, manipulated to the downside. No, come on. Yeah, beautifully respected the minus 0.5 standard deviation level. So at 9:30 a.m. we had a discount opening range gap of 120.25 handles. So we opened right here, trading to the upside, creating the first presentation over here. Note there was no reaction from it, but rather we traded up into the opening range gap consequent encroachment, which is around here, into the midnight opening range. Note the first presentation of Monday is still on the charts, which is this blue line over here. And note that throughout the London session we traded around this level quite a lot. So in my opinion, that's the reason why this first presentation is respected and this one not during the AM session. So trading into midnight opening range, trading back into first presentation of Monday's consequent encroachment, leaving this small portion of the opening range gap open, closing the full opening range gap into the 11 AM macro. And after 11 AM, a huge retracement took place into the first presentation. And note how price used these levels during the PM session. So just 1 minute after the 1 AM macro, took the sell side below these lows. Market structure shift occurred, trading back into the first presentation of Monday and expanded all the way up into the opening range gap high. Yeah, not really exciting day, but this could be anticipated as it was a day ahead of CPI. On Wednesday, we had consolidation going into the 8:30 AM CPI release. So the news report came in during this large candle over here, open high, taking the 7 AM 1 hour candles high over here, trading all the way down, taking Tuesday's low into the not annotated new week opening gap over here, which was just manipulation, taking some sell stops on the way down and expanding all the way up into Monday's and Tuesday's engineered relative equal highs. So Wednesday, beautiful price action. So the purple shaded area is the midnight opening range of Wednesday. The blue shaded areas, as you can see, are the first presentations of Monday and Tuesday. So during London, we pretty much had consolidation, trading up, expanding to the downside. Note the reactions from the midnight opening range and the first presentation of Monday again. So at 8:30 AM, took this buy side liquidity pool, and during 1 minute, let me measure this candle, 285.25 handles in just 1 minute. Yeah, just manual intervention, as you are probably familiar with. So going into consolidation prior to the opening bell. The opening bell, okay, let me see. We had a discount opening range gap of 241.25 handles due to the large 8:30 AM candle. So price was waiting for the right moment, which was the opening bell. First presentation over here, traded into with this candle and this candle, expanding into opening range gap consequent encroachment prior to the to 10 AM. So after 10 AM, retracing into the opening range gap lower quadrant, trading back into the first presentation of Tuesday, trading into the first presentation of Monday and the midnight opening range, and going into the 11:30 till 1:30 p.m. time window, which is the lunch macro. A huge retracement took place, but my eye was on this beautiful portion over here, which was a small portion of the opening range gap, which was still open. And note how later on we closed the opening range gap, and during the PM session we expanded even higher. Note again how the first presentations of the previous days are used in advance. Okay, on Thursday we created the low of day during the London session, trading into Wednesday's range, into the bullish breaker over here, trading just past it, as you can see, just past the low into the CB over here, and huge expansion into these relative equal highs, followed into the daily busy with volume imbalance, which we were monitoring. Note how the bodies respected the consequent encroachment over here. So midnight opening range formed, taking some buy stops above this high, closed below midnight opening range, trading back into midnight opening range low, huge expansion towards the downside, into first presentation of Monday, which was used many days, as you already saw. Going into the 4 a.m. macro, exactly at 4 a.m. was the turning point or the reversal, and a market maker buy model unfolded. So prior to the PPI release, we created this low at 7:14 p.m. a.m. Excuse me. After the PPI release, we firstly took these relative equal highs over here, trading into these relative equal lows, and expanded towards the upside. So we created this busy over here, consolidation going into the opening bell at 9:30. So at 9:30 took the relative equal highs, took the relative equal lows, trading into the busy over here. We had a pretty small premium opening range gap. Okay, decent, of 51.25 handles. So trading into consequent encroachment prior to 10 a.m. Traced up, expanded up, retracing into first presentation created over here. Yeah, this was just a beautiful run, which was easy to capture if you ask me. Because after 9:30 a.m., relative equal highs taken first, relative equal lows taken next, and these were still intact. So that was a huge magnet for price. And note, during the PM session, retracing into midnight opening range, into the first presentation, and a huge expansion into this high unfolded. On Friday, we retraced into the busy on the daily low over here, which was also in alignment with this busy on the hourly chart created just in the PM session on Thursday. An expansion towards the upside was next. So midnight opening range was created here. Manipulation above. Beautiful decline during the London session going into the 7 a.m. macro over here. Market structure shift over here, trading back into the busy, which was the first discount array got respected. So going from the sell side of the curve going into the buy side of the curve. Note how the busies are respected. 9:30 a.m. opening bell over here. We had a premium opening range gap of 24.5 handles, which is indicative for a high resistance liquidity run unfolding. And note what happened next. This was the AM session over here, which could already be anticipated due to the small opening range gap over here. But if you were patient during the opening range formed during 9:30 a.m. and 10 a.m., you can see that no fair value gap was printed over here. The first fair value gap got printed at 1 minute past 10 a.m. So after the opening range was created. So what does this tell you? This tells you that we are in high resistance liquidity run conditions. So over here taking a low expansion towards this high, deep retracement, which is also a characteristic of a high resistance liquidity run unfolding. So expansion towards the upside. We had a tiny reaction from this first presentation, which acted as a bullish inversion fair value gap. Let me measure this reaction from the inversion fair value gap high. Yeah, just 37 handles. Yeah, decent, but yeah, not really nice if you ask me. So consolidation, creating these 1, 2, 3, 4, many relative equal lows. During the lunch hour, we finally took the relative equal lows over here. And low resistance liquidity run unfolded. Note how the midnight opening range is used. Again, deep retracement going into the 3 p.m. macro over here. Yeah, okay, that's it for Friday's price action. So we had an up close week, as you can see over here, opened over here, closed over here. And due to the fact that we had a bullish week and no TGIF setup unfolded, I am expecting next Monday to create a TGIF setup going trading into the 0.2 and 0.3 standard deviation levels. Okay, let me give them another color for this moment. Purple is beautiful, I think. So on Monday, I hope, not hoping, rather expecting some retracement going into this low over here, into the 0.2 and 0.3 standard deviation levels. Okay, that was it for this week's market review for week 7 for Nasdaq. Tomorrow I will be back with a market game plan for week 8, and next week I will be back with the market review of next week's price action. So have a nice weekend and have an even better trading week ahead. See ya!